All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I'm on just a few moments early here, so bear with me. I'll hold off for about 3 minutes before going and doing anything. We do have some trades on the board here to go make here this afternoon. So looking forward to that. I'm just getting the new spreadsheet posted to the site so that you can access it. And again, this link will change every so often, but it will be it'll be this link for the first week, and then anytime the link is changed, it will get posted again there in the message feed. So you should see the message feed here in about 20 seconds. And then we'll get off and rolling. I hope you had a fantastic New Year's and good holiday season. We're off to 2020 here, so pretty incredible how time flies. And 2020. Wow. All right. That link is posted. So January 2020 challenge link is posted, and you should be able to access that. Again, I'll post it, every other day or so, and make sure that it's there for you to access. All right. Now I'm going to kind of do this video backwards. I was planning on going through some of the challenge execution stuff and some of the details of the challenge, but we have 2 entries on the board. And so I'm going to go make those entries. In fact, we have 3 signals on the board right now. So January 2nd, I was asked why I wanted to start on January 2nd. And got a little pushback from Michelle, from Jason, a few others on starting on January 2nd. And my big reason for starting on January 2nd, first day of the year, is because the way the market was set up, the way, kind of things had been, I didn't want to miss out on signals to start the year. And, it's one where, we have quite a few crossovers out there. And both on the upside and the downside. In fact, Coles, I thought it would be a bearish signal, but it's not quite there. But wanted to go out and be able to take advantage of these signals. Now, we have 3 on the board, Netflix, Disney, and StarBucks. And they all have the same action. Fresh 3-7 crossover happening, with them. And, higher highs, higher lows type of trend, that has emerged with them. So a nice little entry point on all 3. I'm going to go buy Disney, and I'm going to go buy StarBucks. I'm not going to buy Netflix. And not buying Netflix 100% for the option value. It's going to be more than 40% of the challenge value to buy one contract. So, I'll go with Disney. I'll go with StarBucks, just simply because Netflix and the option value. When the challenge gets rolling a little bit, we'll have a little bit better time to get into Netflix there. But have a signal going on here with that. So let's go do it. Let's go make these trades. Let's go make these trades happen. And let's start with where do we want to start? Let's start with StarBucks. And StarBucks will have earnings here, in this week between the 24th of January and the 31st of January. And so I'm going to go with the 24th of January options. Now, it's only 22 days, and I want 30-day options. But if I go to 30-day options, the prices of these jump tremendously, and we really don't have a great risk-reward scenario. So the way I'm going to combat that is the way we've combated it before, is I'm just going to buy a little bit deeper into the money and, kind of use that and have the right risk-reward element by being just a touch further into the money. Now, the options I'm watching are the 24th of January, right? The 24th of January, 88.50 calls. Right? 88.50 calls here for StarBucks, and I'm looking at 7 contracts, and I priced them out at $1.80. Looks like they're $1.76 to $1.80 right now. So let's go make this trade happen. I'm just going to do a market order here. Spreads 176 to 180. That's a little high, but, for Starbucks, very normal here. And so in there at $1.80 here on those 7 contracts for Starbucks. And let me make sure the alert goes out, and we'll keep on going. Now I'm just going to pop this into the spreadsheet, the option there. And this says ticker Starbucks, and we'll get the rest of this filled in. But let me make sure that went out. Okay, there we go. Perfect. And let's go trade some Disney. Now, Disney here, it looks like it didn't want to pull back in the last few minutes. But here's Disney. Now, Disney has earnings in February, on February 7th. So I can go out an extra week here on Disney. And I'm looking at the 148 calls here on Disney. It's not the best risk reward out there for it, but I'm looking at 4 contracts here of the 31st of January calls on Disney. So let me make sure the order is set here. But ticker Disney, and again 4 contracts. So we're putting about $1,200 into each position. So 31st of January, 148 calls, right? And I don't think I'm going to do a market order on these. Let's see if I can get a limit order to fill. Let's go 288. I might be just getting a little too picky there. And for only 4 contracts, probably no real good reason to be too picky there. So let's go cancel, replace that, and let's just go to, let's go market. There we go. Let's just get in. 291, right? 291 there was my fill for those 4 contracts. So you can probably beat that. Yeah, like you can normally beat most of my entries. And if you look at last challenge, most of my exits too. So there we go. 291, 4 contracts here for Disney on the 31st of January, 148 calls. All right. So there we go. I'm just waiting for the thumbs up here, and then we'll keep on going. All right, we are in. There we go. All right, so entry date, let's get things filled out here. January 2nd, January 2, January 2. Option price entry here on these. Let me go back and get the data here. But we'll start with Starbucks, and the entry price here on Starbucks is $1.80. Okay, $1.80 for 7 contracts. Now the stock price here on Starbucks on the entry is it was 2 cents higher than it is at the moment, so 89.07. So 89.07. There. The ATR on Starbucks, the average true range. Let me pull that up here for us. $1.14, right? $1.14. So that gives us our stock exit level, our stock profit level, and let's change this from Apple to Starbucks. And again, this current stock price, that's a 15-minute delay based on Google Finance. So the red exit date would be 3 days from now, so the 7th, so 1/7 p.m. session. Let me get this date, 1/2 p.m. That way we have some consistency there. There we go. And the auto exit green date would be 1/9 p.m. Now you'll notice that's only 2 days later. We have in this challenge, as we talked about last time, that we go back to that 5 days, but I am going to talk about that a little bit more here after we get all our data in. And so there we are. So $1.80. And trade is open. Now I will go fill in the delta and the theta and the vega numbers here after this video, but don't want to make this video too long, so I'll do that afterwards. And let's come in here to Disney, and we did 4 contracts here at 291. So $291 for 4 contracts. Stock price here on Disney, it was up $1.60 when it got in here for it. Or, excuse me, 260. Okay, so let's see, $1.47. Quick math here, 23. So 147.23 or 247.23. Did I see that? Yeah, 147.23. My apologies there. All right, in the ATR here on Disney, we are sitting at 203. All right, so 203 there for it. And so that will give us our stock exit level, our profit level here. I'll fill those in. Current stock price there with Disney. And then our auto exit dates are going to be the exact same as for Starbucks. And then our entry price $291, and then that'll give us our cash in. So about $1,200 on each of these, which is about the 40% that we want, and we're good to go. All right, we're in and off and rolling here with the challenge. Okay. All right. It doesn't leave cash for a third position, which is normal at the beginning of the challenge here. So it's it's one that we'll have to wait till one of these closes out and go from there. All right. Now let's come back here to the front page, the challenge setup, and most of this is the same. The start date today, the end date is going to be April 24th here, and that is subject to change, right? This is a fluid thing. We might extend it a little, might cut it short a little, just depending on what's going on out there and where the challenge is at and what it's doing. But that's the approximate end date that I'm looking at here, April 24th. And normal stuff. Challenge starts with 3,000. Signals trigger at 10:30 a.m. and 2:30 p.m. daily Eastern time. Almost all entries and exits are made around this time. It's one where on emergency situations, will I make an entry or exit on a different time? Sure, but that only happened twice last year, so very rare that will happen. Trade allocation will be 40% per signal, dropping to 30% per signal after $3,000 of gains. No automated or programmed stops are going to be used. Occasionally, pre-programmed exits will be used for profit taking, but very rarely. Options are chosen in the 30 to 60-day range in terms of expiration. We did that with Disney. We fudged it a little bit with Starbucks just because of the earnings and went a little shorter term, but we compensated for that by going a little bit deeper into the money. All exits are based on the ATR method, and the ATR method is over here. And if you want more information on it, just video discussion, boom, you click on that, and it'll show, it's a short video of me walking you through the ATR method and how it works. New trades are not entered unless cash is available. I will not exit current trades just to enter a new trade, right? And then while all trade exits and entries follow the algorithm, Jeff can step in under unusual circumstances and change a trade. Rule number 10, and, that's not used very often. But then the last one here, when a new signal is triggered and the option is more than 10% of the norm value, I do have the option to wait 2 sessions to trade it. And, for example, if Disney, if the option value were just significantly overpriced because of, just the way things have happened and because of the implied volatility bump, I could wait till tomorrow to trade that trigger. But, that wasn't the case with Starbucks Disney. Both options were fairly valued, so, went after them. If you want more information on how the triggers work and the 3/7 scan and everything else, that's part of this that you'll see me use each and every day, there is a link here, short video, just walking through that. Okay. Now the last, or well, not the last thing, but the next thing here, the challenge watch list, and it's been adjusted a little bit here for this challenge, and there are 65 tickers for this challenge. Now, I've removed tier 2, and I've removed almost all of the stocks from tier 2. The only two stocks that will be in the watch list this challenge that are in tier that were in tier 2 last challenge are Halliburton and FCX. And you can see that I added them up here. So the rest of these, Delta, Bristol, J&J, Juniper, Twilio, Alcoa, Arconic, General Electric, Dollar General, gone. Not because the signals didn't work or weren't very valid. The option trading for those has just been ridiculous. In fact, we had several signals with Alcoa and Arconic, and yeah, they called trend, but just weren't playable from an option standpoint. So they're gone. I'm removing those. Now, did add Halliburton FCX into this. I removed Comcast and Whirlpool from the watch list and added a few more tickers here that are ETFs. And I did this for a reason that I wanted to kind of discuss in detail. I may wait till tomorrow to discuss. In fact, I am going to wait till tomorrow to discuss this in detail. But the EEM, the EWW, and the EWZ. Right? Now, these are ETFs. The EEM is the emerging market ETF. Right? The EWW is the Mexican ETF, and the EWZ is the Brazilian ETF. Right? Now, I looked at adding PIN, which is the Indian ETF, EWG, which is the German ETF, but I don't need to add all of them to get the signals, to come in with them. So just adding those three, and this brings us up to 65 stocks. So chances are very good, this challenge, that we will have a lot more triggers than what we can trade, which is always the case, but it might be a little more unbalanced, meaning, we're able to trade 40 or 50% of the signals versus, what I would prefer is 75 to 80% of the signals. But that's just a product of having a bigger watch list, here with things. So that's the watch list here for this challenge. And then the sorting methods, nothing has changed. I do need to update this on the sorting methods to take into account option value because here today with the three triggers, Disney, Netflix, and StarBucks, I didn't sort it out based on the sorting method. It was an easy sort because Netflix options were just too expensive to start the challenge with. So I do need to update this and add the option value in here. But anyway, you'll notice with the ATR method, 5 days without triggering step 1 or 2 equals an exit if the option is currently green. Last challenge was 6 days. Now, we talked about this last month that, the difference between 5 and 6 days, it's not a huge difference. But I'm going back to the 5 days just from a rhythm standpoint. Now, over this holiday break, I've spent a lot of time combing through the data and really looking at the data for the last couple years in regards to the ATR method. Because the ATR method, let's face it, last challenge, it did us wrong. The challenge called trends, and we went through it. The challenge nailed trends. Here's GLD. And it signaled right here in December, and beautiful trend. But the ATR method made it so we just couldn't really ride that trend. It took a little too long to emerge, and we were out. And we had a lot of things, a lot of entries and signals in the challenge last quarter that did this, right? And so, I spent a lot of time kind of looking and going, okay, is this a one-off? Is this something that's, maybe more consistent? And the bottom line is I came up to the same conclusion that I've always come up with, that this kind of 3 day, 5 day, it still models the best. Does it miss out on some? Yeah, it sure does. But over the long haul, it plays out and models the best. But I did decide to add a little caveat here to it for this challenge, and that is down here. Subject to extend up to 8 days. Now, this is one that is going to be at my discretion, and it is going to be something that is dependent on a number of factors. One is, are there other trades out there, right? If there are other trades, we're just going to follow the ATR method, take it and go. What's the option risk now coming into it? Because there's a difference in option risk from 3 days, 5 days, and 8 days, right? But if we are in that situation where the option risk is low, where there aren't other signals out there, and we still have a very valid signal, I'll continue to hold it. Right? I'll continue to hold it upwards to 8 days. That's not going to happen very often. In fact, I don't expect it to happen at all. But I did want to put that caveat in here just in case we see, some of those situations come in and, get a chance to, react accordingly to them. All right? But bottom line, what is the purpose of the challenge? Freedom. Financial and time freedom. This shouldn't be something where you're sitting at your computer all day, every day, wondering, I wonder what Jeff's going to trade. No, the trades are made at consistent times, 10:30 a.m. in the morning, 2:30 p.m. in the afternoon. And, for those of you that have been with us for other challenges, you know that almost all of the trades happen in the afternoon. Very few happen in the morning. The algorithm is just tighter in the morning for good reason. But, it's one where that financial and time freedom is what we are aiming at. What do trade signals look for? Right? They're looking for a high probability of a 2 ATR trend move. So, for example, if we come into Disney, what is the Disney position looking for? The Disney position is looking for a 2 ATR move. The ATR here is about $2. The position is looking for a $4 move to the upside, right? And that's what it's looking for. It's looking for when the probability of those 2 ATR moves is high. It is not looking for what's going to happen tomorrow. It's not looking for smaller oscillations. It's not trying to call tops and bottoms and, some of that other stuff that, we as traders, we like to get the tops and bottoms, and we like to know what's going to, or try to predict what's going to happen tomorrow and hit all the smaller oscillations, but it's just not a reality, all of the time there. And the challenge, it's not geared and looking for those things. It is looking for those 2 ATR moves. Okay. Alrighty, so that's the January 2020 challenge, and we're kicked off with an entry on StarBucks and Disney, and I expect some good things. Be nice to get off to would be nice to get off to a hot start, and let this roll. I did make a small tweak to the algorithm here for this challenge, and that tweak is on the bearish signals. And really, since we've gone live with the automated challenge, we've had the bearish signals simply have a higher burden of proof, meaning they need to be higher probability signals to trigger bearish, just simply because of the market conditions, right? And the high probability of whipsaw on the bearish side. But I have lowered that burden of proof for a bearish signal, and so I do expect that we will get more bearish signals over these next 4 months. I don't expect it to be more bearish than bullish. In fact, it'll probably be a lot more bullish than bearish, but we should have a few more bearish signals mixed in. We almost had one today. In fact, I thought it would, but ultimately didn't. Coles. I thought we'd have a bearish signal on it, but and you know me, I'm very bearish on Coles. We talked about it on the earnings. We talked that, hey, we're likely to see a little basing out or a little rally that gets sold into, but path of least resistance likely to be lower here for Coles. And it has a downside 3-7 crossover and all of that. But the probability of moving 2 ATRs in the short term here is just not very good. So did not get a signal here with that. Okay. All right. So often rolling with StarBucks, often rolling with Disney, and we'll see. We'll see how they go and react accordingly here to them. Tomorrow morning, Beyond video, I'll talk about the addition of EWW, EWZ, and I'll talk about FXI, which is the Chinese ETF, and EEM, the emerging market ETF. And today we see small caps down, right? Small caps are red. Yeah, the market's up. Small caps are red.